Assalamu alaikum everyone, welcome back to another video. I hope you're having a great day. Today's video is all about my portfolio. So it's that time again where we look at the portfolio, see any buys, any sells, but this time I'm just going to do slightly different. Okay, so before we get to that, the whole portfolio, I just wanted to let you know the account that I'm using right now is Trading 212. I've also got a Freetrade account. I will share the screenshots from Freetrade because they don't have a website web version, and I'm using my desktop. So I'll share the screenshots on my Instagram account. So just if you're following that, you should be able to see. I think there's about £2,200 in there. I've got a couple of companies in there. Some are in the red, which we're going to talk about in a bit. But today what we're going to do is we're going to look at some of these companies, okay, individually, break them down, and then I'm going to talk about a couple of things that I think are really important. But before we do that, I just want to touch quickly, talk about the S&P 500 just the last week. Okay, so just this week, you can see all the companies that are in the red are the technologies, the semiconductors, communications. You're looking at Apple, for example. You're looking at all the healthcare companies, and the companies that are in the green are the financials, are the energy, for example. You're looking at the Procter & Gamble's of this world, and all of the Verizons and TNT. All of these companies that are in the green, okay, tend to be the more defensive companies, and the companies that do well if the interest rates go up. So in US, the Fed is basically now making the decision on basically changing, increasing the interest rates. And when that happens, the stocks, the tech stocks basically suffer a lot. Because remember, a lot of these companies, especially, I think the big boys are okay. The Googles, the MasterCard, the Visas, and all of that companies, they're okay. But when we look at the full, the stock market generally in the just last week, okay, let me just quickly show you. This side, you will see a lot of red. And this include companies like, for example, Uber, companies like CRM, companies like CrowdStrike, and so on. Some of these companies rely on getting the loan from the bank, okay, when the interest rates are very low, they get interest from the banks, and then they use that to innovate, to pay off whatever debt and so on. So basically they use that money. When the interest rates go up, it makes no basically sense for them to borrow money. So because the Fed have not actually increased the interest rate for a while, now they came out and said, yeah, we are planning to increase this interest rate. That's why the tech stocks are suffering. So companies like, for example, CrowdStrike, which is a great company, and Squares and so on, they've been borrowing money from the bank with almost zero interest rate, right? And now all of a sudden they have to pay interest rate. So that becomes interesting. So that's why a lot of investors have taken their money out and probably moved into the financials, into the energies, and basically more of a defensive kind of stocks under when the interest rates are higher. So yes, that's kind of talking about the micro and macro economics, but we're not really interested in that. As an investor, I just look at my portfolio and say, okay, where is value right now? So I know this do I know the companies that I own? Okay, and are they undervalued, overvalued, and what does the future look like? And this is the thing that I want to talk about today. So first thing we're going to look at is this thing here. I've called updates. These are the stocks that I own under the information technology. Within that, there's 3 companies that I own, that semiconductor companies, and then 1 semiconductor equipment, and then the rest of them are software, even though this one is more of a cybersecurity kind of software, right? So when you look at their earnings, these companies have high growth rate because the earnings, they earn quite a bit of money, okay, earnings per share. They also, in terms of sales growth for the next basically year, is expected to be 12%. And the next 5 years, the business is supposed to grow about 15%. Okay, and because of that, these companies have a higher PE, because when you see this double digits, you'll think, okay, the company is expected to grow this much, so I'm willing to pay this much. So people are basically betting that these companies will do well in the long run. They will make a lot of money. Therefore, that's why the PE is very high. So even though this is now quite high, a lot of people might be buying, Broadcom, because they know the future looks really good. Double-digit growth, double-digit sales growth. That's brilliant. Therefore, they were willing to pay more. At the moment, I'm not in that camp, right? I'm not in that mind frame. Right now, I'm thinking just basically hold. I'm holding this company because, as you can see, this is Morningstar valuations. So I'm going to keep the ones that are 1 star, 2 stars. I think I'm just going to leave them for now. The ones that are 3 stars, I might look into it. The ones that are 4 stars, I will talk about them in a second. Okay. So as you can see, Broadcom, for example, 12% sales growth next year, and the next 5 years, we expect basically the growth rate to be about 15% every single year per annum. Okay. Same goes on almost Qualcomm, quite similar, 18 to 26. Okay. And right now it's fairly valued. Taiwan Semiconductor, 25 to 16. KLA, 32 to 20. So every single company in here is basically trading high multiples, but because of this growth. Companies like Adobe and Salesforce are really cheap at the moment. 4 stars is almost one of the cheapest. Okay, so that means they're really undervalued. And the growth for Salesforce this year, okay, is 24%, and then next 5 years the business is supposed to grow about 10%. Same goes for Adobe, 14 to 15. And then look at CrowdStrike. They don't have any earnings yet. That's why they don't have a PE. So they're negative at the moment. So they're not really making a profit yet, but they're getting there. So every quarter, they basically cut this down. Okay, so soon they will be on the positive. I'm 100% sure within a year or maximum a year and a half, this will be a positive number. Right now, it's fairly valued. The growth, sales growth for this company is basically 64%. 64% sales growth. That means a lot of the companies out there are really in need of the software this company provides. Okay, and the next 5 years, we're looking at about 75% growth. Now, this is one of the companies that will suffer under high interest rate. Okay, and for that reason, that's why it's been basically selling. But if you love the business and you believe in it, okay, and you already bought this stock and you feel like, okay, it's only going to go up because I know it has the future, it's the potential to go up, and there's nothing wrong with the business, then why not put some money into this business? Now, I'm not giving you financial advice. That's what I'm saying to myself, okay? And this is one of the companies I'm having a look at again, because I don't have that many. Like right now is less than 1%. So less than 1%, that's all I own. Okay, but I've been focusing on other companies that I feel like that are way undervalued at the moment. So that's what I've been focusing on, right? So that's the technology sector. Then when we look at the financial services, we look at Visa and MasterCard. They can be technology, but I like to call them financial services because that's what they are. Both companies at the moment are fairly valued. They have a high multiples, but you can see the growth because of this growth. Okay, you gain double digits. Okay, 23%, 26%. MasterCard looks absolutely brilliant to me. Okay, and you got earnings per share of $8, which is really good. It's almost double what Visa gets, although Visa is a bigger company. Okay, then when you look at consumer staples, these companies here, okay, one of the things you will notice straight away is about this business here is, let me just adjust that, it's a bit annoying, there we go. So these are the consumer defensive. These are the companies that do not go down 10%, 20% every single day. They're stable, they gave you stable dividend, okay, so, and if you're looking for that solid payment every single month, then reinvest that to create the more start the compounding effect, if you like. This is the companies that I'd like to invest in. That is the companies that you should look into. Okay, so Medifast, for example, Procter & Gamble, Coca-Cola, and Unilever are the 4 stocks that I have in here. Before, I used to have Kimberly-Clark. I sold it. I talked about it last video. Okay, and out of all of them, okay, the one that's really pricey and the one I would love to add to right now is Procter & Gamble. But I'm sure it will come back down to earth very soon. Okay, I'm going to just wait, hold it for now, and then I'm going to start buying more once it becomes at least a fair value. At the moment, it's just too expensive. Okay, The next part we're going to talk about is the healthcare. Healthcare has not done well at all, basically, in 2021. Okay, they're one of the underperforming sector, and I think this sector this year coming, I think it will be a great year for them, and that's what I'm betting on. Hopefully, we'll see how it goes. So when you look at their PEs, they're not that bad. Okay, the earnings per share looks solid, and then you look at the growth in some of these business. Apart from Amgen, the rest of them really look good. Okay, you look in double digits in some places. So, for example, Merck, for example, 16% sales growth and 15% of the overall growth of the business. That's amazing. Okay, so because these companies are at the moment undervalued, especially Medtronic and Merck, those are the ones I want to focus on, as well as, obviously, I love buying Johnson & Johnson because I think this is probably, after Microsoft, this is my second favorite business in the world right now. And then we got the consumer sector, okay, and this is cyclicals, and that means they have business where we don't really, it's not essential, basically. That's what they do, okay, so they're not essential businesses. And a lot of them are overvalued at the moment because this is been doing really, really well. The Home Depot, for example, I think I've almost, got like 50% up. I'll show you in a second. We'll go back to Trading 212 account in a second. But I think both companies, Home Depot and Lowe's, I think I'm almost up 50%. VF, for example, is another great company. Look at the growth in this business. It's slightly overpriced according to my Morningstar at the moment, but 30% sales growth and 46% in the next 5 year growth of basically next 5 years. That's the massive growth rate, 46%. Then you've got Tesla, which is absolutely crazy. It has a positive earnings per share. It's got 345 PE and currently overpriced or overvalued. And then you've got 41% and 73%. This is the reason why this stock is overvalued, because everyone else sees the growth in the business and says, okay, I'm willing to pay extra for this growth. And that's all it is. Then you've got the industrials. These are companies where there are a couple of businesses in here. For example, 3M. Yes, you can buy products that 3M makes, but the rest of them, it's basically they do like they don't do consumer to consumer. It's company to consumer. It's more to do with business to business. Okay, so for example, Cummins is more about construction machinery and heavy trucks, and they also have loads of different trucks that they've created. The engines that they've created has been now they're kind of moving away from the old engines to now more of a renewable energy kind of side of things. Okay, so 21% growth. Sales growth and the 19% overall business growth in the next 5 years. Okay, and to me, this is double digits to get from the consumers. Although the only issue is with this, and we've talked about this before, when overall the industrials do really well when the economy isn't booming. Okay, nobody will be basically sending stuff around or using railroads. Okay, if the business and the economy is not doing well, and when it comes to trucks and whatever, nobody's going to buy these products that some of these companies make if the economy is not doing well. So they do depend a lot on the economy. And then you've got materials. Okay, again, it's very similar, but a lot of these companies are dealing with the chemicals, the mining, the metals, and that side of things. Okay, and when you look at, for example, PPG, it's overpriced. And I wished I bought more of this bit of business. I bought it initially a long time ago. It went too high up, and then I sold it, and then I bought it at the bottom, and then now it's back to where it was. I'm not going to sell it this time. I'm going to hold on to it, get that dividend, and hopefully if we see a correction, then hopefully it will come back down to maybe a fair valued or possibly undervalued. But the other two look like they are fairly valued or undervalued at the moment. Okay. Rio Tinto, I couldn't find a lot of information in terms of growth, I couldn't find information on Yahoo Finance, so I left it like that for now. Air Product and Chemicals is one of my favorite at the moment, really undervalued. I'm buying more in the next few weeks, so basically I've added to it last week. I'm going to add it to this week, so my target is about 20 shares of this business, hopefully before it becomes overvalued soon. And then you've got Activision Blizzard, which is a new to the portfolio. It's been about a month now, and overall this is doing okay, is overvalued, basically way undervalued at the moment. This is one of those businesses that you're going to have to be really patient for the next at least 3 years. You might not see a lot of growth, even though it says 13% in the next 5 years. You might not see that soon enough. Okay, you might have to wait for a while to see that. So I'm willing to dollar cost average every month. I've got about 15 shares, and then keep it in your portfolio. That's what I'm doing anyway. Just I'm going to keep it in my portfolio, dollar cost average, take that dividend, and then be patient with it for the next at least 3 years. Okay, and let's see what happens. So one of the reasons I wanted to show you this is that these companies have all positive earnings apart from CrowdStrike. I wanted to show you the fact that some of them are overvalued and undervalued, and the fact that what I'm betting on, when I don't like selling stocks and I want to keep everything in my portfolio. So by doing this research I've done on basically the sales growth and the next 5 years, that was just for me to actually see where these businesses are heading. If some of these businesses did not have a good, for example, return on investment or sales growth or the next 5 years or whatever, I would have sold them straight away. Okay, so this is kind of reassuring for me that these businesses are good, they're healthy, they've got, and the other thing I would have included sometimes in these kind of things is the free cash flow, because the dividend paying stocks use the cash flow from operations to actually pay you that dividend, or the net income. From the net income, whatever is left, that's basically the money they use to buy back shares and all that stuff, pay you dividend and so on. So this, I hope you enjoyed this, because this is, to me, this was important for me to kind of show you why I'm investing in this business and what I see in this business. So the fact that if this company goes down 10% tonight, I am not selling, I'm buying more. Why? Because of this, because I believe in this business and I know it's doing well. So when Visa went down, I bought more shares of Visa. I think I had initially 6 shares, I bought more. And that's the kind of thing I want to do, inshallah, going forward. So the next one is the dividend income. So this month I've only been paid almost about $13 to £13. So we'll see what happens. It's still early days. So today is the 7th, I think. So we'll see what happens this month. But last month was absolutely brilliant. £155. That was the biggest I've received since I started basically investing in the stock market. Okay, so the first year I received $163 and 82 pounds and 82 cents, and then pence, sorry, and then £558 this year, which is really, really good. So inshallah, this coming year, the projected, if I quickly show you projected dividend, so I'm using now simply save dividend. So you can see in the next couple of weeks, so today I should be paid about $17, over $17. Then next couple of days, couple of payment there. And then for the year, so the rest of the year, so January is only $29, February 41, and then almost $200 in March, almost $200 in June, over $200 in September, and then $200 in December. And because I'm reinvesting this as well, it definitely should be growing. I'm investing again, I'm carrying on investing every single month, to basically £1,000 every single month. That's the target. So $250 each week, and I kind of dollar average into stocks that I really like, which I will talk about in a second. And as you can see, the breakdown here, majority of my money comes from, right now in terms of dividends, it comes from Rio Tinto, J&J, 3M, Broadcom, and so on. As you can see here, every single stock, the lowest that I receive is West Management, and I only have, I think, about a couple of shares in there, and that's just $3. So overall, $1,200 and something. That's the expected, or $235 for this year. So inshallah, see how it goes. That's the plan, is just to carry on, dollar cost averaging. I'm not worried about the dividends being cut on, all that stuff, because if you look at the dividend safety score for the overall portfolio, what you would see is that 87% is likely safe. Okay, and you've got one that's borderline, and I think that is Rio Tinto at the moment. There we go. Rio Tinto is only unsafe about 40, and then Medifirst is at 45. This is a very small cap business. It's like $2 billion business, but they pay high dividends. So that's why I'm really cautious about this. I like the business. It's very undervalued at the moment, but the dividends are not actually that safe. And then you've got companies, a lot of the companies pay about 90 or above 90%, which are very safe or safe. Okay. All right, finally, the last thing that we're going to do is the buys and sells. I sold out Emerson Electric. I really like the company, what they represented, but I just don't feel I fully understand the business model. They have so many different products. It was confusing which one was selling more. I looked at their financials. I got a little bit confused. So I might do a little bit, research a bit more about the business. And once I've got full picture, I'm happy to buy it back. It's undervalued at the moment. Great business, but to be honest with you, I couldn't understand. I was trying to just understand the whole business model, but it was very difficult. So I sold that, and then I put that money straight to $318 that went straight to Air Products and Chemicals. So I bought more of APD and I sold that Emerson Electric. And as you can see, Medtronics, I've already talked about this before. I bought 10 shares, Coca-Cola 6 shares, and then I bought 2 shares of 3M just this week. Now, the watch list is the final thing I'm going to talk about. So in this order, so what I'm doing now is this is the order that I am purchasing these stocks unless something else happens. So 3M, I've already spent £250 this week, so I'm not touching that in the next couple of weeks. Then I'm going to buy a bit more J&J, then Microsoft, then Medtronics, then Merck, and then so on. The final thing I want to talk about is diversification, okay? And then when you look at my portfolio, you will see I don't have any utilities, energy, real estate, or financials. Financials, maybe you could say Visa and MasterCard. I've sold that in SPGI and Moody's because they were very overvalued and I had like less than 1 share anyway. So I sold that a long time ago. I think it was just around beginning of December I sold them out. So utilities, I'm not really bothered with that right now. Everything in there is non-Sharia compliant, and a lot of them have a higher debt. Energy is the one that I'm looking at. And one of the things that I've noticed last year, so I was looking at the results from the 2020 stock market, right? So from December, this was released December 31st of 2021, and this is how the S&P 500 performed. And when you look at the energy, so energy has returned, if I quickly show you here, okay, energy's return for year to date was 53%. So last year, energy returned 53%. This year, I don't think it will return that much, but it will probably be about mid-20s. That's my prediction. Okay, real estate is another one that returned 46%. 46% for real estate. Then you've got financials, which are like 35, technology 34, then you've got consumer discretionary up 28, materials 27, 26 for healthcare. Healthcare is actually not bad. I thought it was worse than that. 21 industrials, 17 for utilities, consumer discretionary was 17, which is basically the Procter & Gamble's and so on, and then communication services was only 16%. Now, so the best performing sector last year was energy, the top 3, real estate and financials. And I don't have the 3 that we just talked about. So for going forward, one of the things that I want to do for next year is bit more, just put a little bit more focus on trying to include some of this, okay, especially energy, real estate and financials. Financials, like I said, the 2 companies that I like in there are really overvalued, so I'm going to wait for them. Energy, I'm definitely going to add to my portfolio. And when I say I'm going to add, this doesn't mean I'm going against what I believe, which is basically in terms of the renewable energy, the Teslas, the EVs model, whatever, right? But in terms of the oil sector, it's not going to go away in at least the next 10 years. And that's my basically plan. And if I think it's not going away for the next 10 years, then why not own maybe about 2 to 3%? So if I can have 2 to 3% in my portfolio of energy and energy stocks, I'm probably add 1 or 2 real estate stocks. So that's the plan, and I'm going to look at, and I will, as soon as I find something that I like, I will definitely let you know. The only company that I've found so far in the energy sector that I could potentially add to my portfolio is EOG Resources, and that's the energy, low PE right now. The price, based on my basically prediction, is literally a 5% discounted at the moment. So don't be surprised if you see this stock in my portfolio. And like I said, yes, it is the best performing sector, okay, last year, but that doesn't mean it's going to be next year. So don't rush straight away into buying into this, okay, because it could potentially go down. I mean, in the last couple of years, it was actually in the negative. So you have to be careful. You really have to be careful, okay? So inshallah, I will see what happens. I'll let you know as soon as if I add anything. This video is actually longer than I wanted it to be, but there was a lot to talk about. And I hope you've got some value out of this, okay? So from just the updates here, to me, this was important to kind of give me the bigger picture of where some of these stocks are and where they're headed. Okay, in terms of the dividends, in terms of the diversification of overall portfolio, I think it's heading the right direction. So inshallah, see what happens anyway, 2020. And my predicted income for this portfolio is about $1,235, and for this year, inshallah, by the time we get to the end of this year, I want £1,000. So by the time we get to April, 6th of April, when I will be getting the new ISA, right? I want to be at least add another £200 to this, so at least it becomes £1,000. Okay, that's my target. In terms of ISA at the moment, I still have about 7,000 to invest. Okay, so just less than 7,000 to invest between now and April. And yeah, that's overall everything I have. And I hope I've been transparent enough. And if you lasted this long, please just give this video a like. I appreciate your time. Thank you very much. Assalamu alaikum.